possible Twitter-Musk tie-up is being closely watched by advertisers. Musk's more freewheeling approach to speech on the platform could make brands nervous about showing ads on Twitter. Twitter late last week, of course, adopted a poison pill in an effort to thwart a possible hostile takeover from Musk. Let's get the ad perspective now with Sir Martin Sorrell. He is founder and executive chairman of S4 Capital. Sir Martin, good morning. It's good to see you, or good morning for us, I guess. It's a bit later in the day for you.
Good morning on Bank Holiday Monday here.
Well, thank you for joining us on a bank holiday. We appreciate it. Talk to us about how advertisers approach Twitter now and what you think could change under some kind of Musk changes in leadership.
Well, in the context of digital advertising, Twitter is, I hesitate to say a rounding error, but it is a small part of the advertising ecosystem. That was probably about 425 billion, 450 billion last year, with Google taking the top spot at about 215, and Facebook at 115, and Amazon for the first time revealing 31 billion. So 3 billion at Twitter, 5 billion total revenue, smaller than Snap, which I think was around 5.5 billion. So you are talking about one of the smaller platforms. That doesn't mean it's insignificant, but this, to my mind, is more of a trophy property play by Elon Musk. It will give him a strong voice. It's a latter day or modern day Hearst or Murdoch using new media instead of old media. So no different to Bezos or Benioff flirting with Time or the Washington Post, but this is just in the area of new media. In terms of advertising impact, very small. I mean, you're talking about 1% maybe of the digital marketplace. Now, I know that the CEO talks about increasing revenues by 50%, but that would take the ad revenues on Twitter to around about 5 billion. So you are talking about a small platform, as I've said, and I think of minimal significance in the digital ecosystem. If advertising came off, Elon Musk has made it quite clear that he doesn't appreciate advertising on Twitter, that it biases editorial policy. I'm not sure I agree with that, but that's a point of view. And if he did gain control, maybe you will see a change. But in the context of what we see overall, both West and East, the big 6 platforms, Google, Meta, Amazon, Tencent, Alibaba, and TikTok, really small.
Sir Martin, is it unfair to say that just because Elon Musk hasn't necessarily been all in on advertising, I think at Tesla, they don't do much of advertising, if at all, that he can't have success with the advertising model at Twitter should he win the company?
Well, he advertises, but in a different way. I mean, I think the average auto expenditure per car, it varies from $20, $30 a car to up to 2,000, probably averages around 800, 900,000 a car. He claims he doesn't spend any at all, but he does it in a very different way, using new media and his brand extremely effectively. And Tesla has built a wonderful market position, a very strong modern market position in a very different way. And if you link together what he's doing with Starlink from above, what he's doing with his data points. I mean, his cars are not really cars, they're computers on wheels, they're data points on wheels. Linking that with Starlink, linking that, or those two things with what he's doing in space, he has a very, very interesting data system around the world, both on Earth and in space, which is a challenger not just to auto companies, but to telecommunications companies, and threatens to disintermediate them at scale. You see what he's done in the case of Ukraine, making Starlink available to the Ukraine population. So you probably will see increased use elsewhere. So it's part of a digital data ecosystem which is new, disruptive, and extremely effective.
For as long as this cloud hangs over Twitter, do you think advertisers will just start pulling back on how much they spend on Twitter?
Well, there are, a couple of 100 million followers on Twitter, or users of Twitter, daily average users. So it's an effective platform at a small scale. I doubt whether it will hinder it much in the short term. We'll see what happens. I mean, the love me tender sweet tweet seems to indicate that he might make a tender offer, which, just intuitively, you think that's the direction in which he's going. Both sides have formidable advisors, Goldman and JP Morgan on one side and Morgan Stanley, I think, on the other. So we'll see. It may become a battle royal. We'll see. Maybe some Thoma Bravo has come in indicating there might be of interest. It's a heavy price, 45 billion for a company with a cash flow of 700 million, revenues of 5 billion. That's a pretty chunky price. If I was on the board, I think I would take it.
So, Martin, I would be remiss if I didn't ask you about your own company as well, S4
Sure.
Capital, because the stock price has taken a hit recently. You've had 2 delays in the release of your financial results because the auditors, PricewaterhouseCoopers, are still auditing. Can you give us any more information? It seems as though what the market has reacted to is not knowing what's being uncovered in the audit that would cause this sort of delay. Can you give us any more information on that?
Well, the information we've signaled or sent out the information in two bulletins recently. Can't say much more than that, other than Pricewaterhouse continue to do their work, and I anticipate a resolution in fairly short order.
And so is that sort of your message to investors to try to reassure them?
Well, as we said before in our previous release, we said that Pricewaterhouse continue to complete their work, and we confirmed that the results would be in line with market expectations, the range of market expectations. And I think that's very explicit. If there was anything material to report of significance, we would be obligated, both PwC and ourselves, obligated to report it. So I would just say, just stand by for further news.
All right, we'll leave it there. Sir Martin Sorrell, founder and executive chairman of S4 Capital. Good to see you this morning. We'll talk to you soon.
Following its Q1 earnings report, the company lost subscribers for the first time in 10 years. For more analysis, let's bring in Santosh Rao, who is the Manhattan Venture Partners head of research. Just your reaction on this headline number and, of course, the first time losing subscribers in 10 years for the streaming giant.
Hi, thanks for having me. Well, this is a body blow to the bull case. Definitely the Netflix story, the subscriber story. Netflix was all about subscribers for so long, and now you saw that, and it's really taking it on the chin here. And it was bad across the board. So let's wait and see. Let's see what the conference call says. Why did this happen? But it looks like a systemic thing across the board. The subscriber account was down. So let's see. Is it churn? Is it competition? Is it the pricing part of it? Or what exactly is going on? And what are they saying? And how are they preparing for the future? But net, the bad number, and everything has to be re-rated. The whole story has to be re-evaluated from a lower base now. I mean, the multiples are getting compelling at this point, but we need to see that the growth story is still intact and they have a strategy to tackle the challenges ahead.
Santosh, they lost 1 million subs with discontinuing service in Russia after the invasion of Ukraine. All that aside, a net loss of 200,000 is devastating for them. What changes might they make in the face of this?
Well, I think they have to continue what they're doing. I mean, they had a whole slate of new releases, and they have some. Hopefully, there will be more stickiness down the road in the later half of the year, so that'll catch up. Content is important, and that's the key for their key differentiation at this point. Competition is there. They are spending quite a bit. They will be spending $8 billion, so they may have to optimize that. So net, I think they need to figure out where they're going wrong. But at this point, they should continue. But then more than that, they need to get into some other sticky things like more gaming, maybe sports, advertising revenue, of course, kind of go on all these additional levers that they need to pull, because this is not working. The traditional core business may have peaked, especially in their core markets. Emerging markets are still good, but we need to see. I mean, APAC and EMEA regions are still underpenetrated, so they need to go there with a more localized and better strategy, with better pricing as well. I don't know if the pricing is sticking. We'll see whether that's helping them or not, because they are the highest on the street overall in terms of the pricing, monthly subscription. So we'll see. They need to look at a lot of things. Back to the drawing board, really evaluate where they are really going down, getting hit badly.
You raise an interesting point about emerging markets. Netflix clearly has a lot of international content that it continues to put on its platform. Where should it be looking then in terms of expansion for more subscribers?
Well, India is a great market. Japan is a great market. They need to keep on growing there. And those are the key areas. And even here, see, overall, there are about 700 million broadband homes around the world. So it's totally underpenetrated. Those regions are underpenetrated. There's still margin to grow. Subscription is the business. Streaming, rather, is the future. But they need to, the incremental subscriber is not going to be easy to acquire. So they need good content, continue with what they're doing. And the content they have to spend. That's the key to pull people in. But they need more sticky factors. So I think I would say emerging, Japan, India, and all those areas which are underpenetrated so far, they are the prime markets to attack. And even though the ARPU is low there, but they need to get the volume there as well. And then stay in the core market is also kind of compete. Right now, the new competition is coming up, so you can feel the pressure there. But if they stay on the game, I think they can kind of establish their niche in there in the core markets as well. But overall, they need to grow and they need to compete, and that's the new reality for them.
Santosh, I want to come back to something that you were mentioning a moment ago, and whether this is something across industry that we should look out for over the course of this earnings season, or if this is specific to Netflix. But I'm tracking shares of companies like Disney. DIS shares are down in after-hours trading by about 3.4%. I'm looking at my screen as well at WBD, which is, of course, the newly formed Discovery Inc., if you will, that is going to also continue to play in this space. And so with that in mind, how much of this do you think we will see show up in some of these other streaming giant earnings reports?
It will be across the board. I mean, it's not just Netflix in particular. I think it's going to be, you're going to see the numbers across the board come down because that's the new reality. And don't forget, you have the macro factors as well, inflation and all that. This is a discretionary spend. As much as it's required and popular, it's an extra 30, 40 bucks or whatever, 16, 20 bucks out there. And if you spend two or three apps, it's a lot of money and people are cutting back. So that, I'm sure, is also playing into this whole demand side of the equation. So let's see what it is, but I expect across the board reductions in the subscriber count.
And perhaps they explain that in their letter to investors that says COVID clouded the picture by significantly increasing our growth in 2020, leading us to believe that most of our slowing growth in 21 was due to the COVID pull forward. So you may see a similar statement from other streamers. Moving forward, do we expect a model that includes ad-supported, free, or even lower-priced content?
Absolutely. I think looks like they need to go there, even though they don't want to go there. I think looks like they may have to, if that's the only source, good source to go to at this point. Even though they don't prefer that. I mean, Netflix is known for its ad-free content, which is good, but at some point you have to get real and say, you know what, we need revenues, and that's the big push on that. The bear case, if there is one, was can they maintain margins? Can they get the cash flow numbers? The free cash flow numbers that they were targeting, can they hit the subscriber count overall? That metric seems to be in real pain right now, the subscriber count. But if they can maintain their profitability, show the revenue growth, I think they can still be in the game. They are still the incumbent leader, so they can still manage that.
Santosh,
they still need to execute.
Very quickly, while we do have you here, because in not just a decelerating subscriber environment, but now a declining subscriber environment, as we've seen in these figures, what does that tell to you? What does that tell you about the price point that we're going to have to look at across the board and the adjustments that are going to be necessary there? We only have about 30 seconds.
Yeah, I think price points are important. I mean, if this decline was due to the price increases, I think you're going to see some pullback there as well, because at some point you have to get very optimized. You have to optimize the pricing point. So you will see. I think there is a cap to how high they can go, and they may have to come down more if needed to maintain their subscriber.
Santosh Rao, who is the Manhattan Venture Partners Head of Research, breaking down Netflix earnings with us here this afternoon. We appreciate it very much.
Happy 420. With Congress divided over cannabis legislation, can the sports world actually lead the way in normalizing marijuana in America? Hall of Fame wide receiver Calvin Megatron Johnson is betting that is the case. Calvin founded cannabis company Primitive Group with former Lions teammate Rob Sims, and Megatron joins us now from their dispensary in Niles, Michigan. Good to see you, Megatron. So everyone knows you played 9 seasons in the NFL. You set the record, which still stands, receiving yards in a season. How did you use cannabis during your career? How did it help you?
Oh, for sure. I mean, in a plethora of ways. But 2 main things: just insomnia, so helping me with my sleep, which goes a long part in helping with your recovery, and really helping with pain. So those are the main 2 ways that it was able to assist me, and obviously keep me off of a lot of other synthetic opioids.
How many guys do you estimate, percentage-wise, used it during your NFL career, and how many do you think use it today?
And that's a great question. We've always contemplated this in the locker room. I would always say it's probably more like 75% of guys have actually ever used cannabis. Currently in the locker room, with the new legislation and the new ways, the CPA, they have allowed guys to test higher, have higher doses in their system. I mean, I would say that number has at least bumped up at least 5 to 10%.
So we're talking 80, 85%. To that point, you mentioned the new CBA. The NFL does not suspend guys for positive tests. It does fine them, and it has raised the threshold for a positive test. Are you happy with where the NFL is on this? Do you still have advice to the league on how better to handle cannabis?
I think he's just really just looking at what's the alternatives out there. What are they actually using versus the plant alternatives, the natural alternatives versus the synthetic things that they're giving us now. So I think that if you're really just looking at what's better for the body, things of this earth, I think those are the things that should go into our body. If they think about it like that, then no, we're not where we need to be at today. But they are moving in the right direction. I can't say that.
Okay, so you mentioned how you used it during your playing days, but that wasn't what really inspired you to go into the business. It was actually a Dancing with the Stars injury. Not everyone knows that. If you could tell us about that story and what made the light go on that this was a business you wanted to be in.
Yeah, the light, like I say, I used it in my playing days, but the light really went off for me when I was doing Dancing with the Stars. I was about to quit the show because I was having the chronic swelling that I suffered from in my playing days. A buddy of mine that lived in LA at the time, he brought me a topical. And the topical went on to alleviate me of the swelling. And so at that point, I was like, okay, we got to get to the science behind it, because there are many healing properties to the plant.
We just showed a graphic earlier about how many guys that are former players that have gone into the cannabis industry. Here they are, Ricky Williams and Paul Pierce and Gary Payton and Marshawn Lynch. Kevin Durant, who still plays, doesn't have an official business, but he has a partnership with Weed Maps. How are these guys helping drive the conversation? And I have to point out, all of the names that I've mentioned, Al Harrington, Allen Iverson, are all black. How would it help, if at all, if there were a white player in the industry?
I mean, any of our brothers, I think it's really just, educating people about the healing powers of the plant. And that's why we're here, to educate, to innovate, and to do research on this plant. I think that the more people you have, the more heads you have at the table, the more people that are pro-cannabis, the faster this thing is going to turn around, and more people that will be able to help. But it's really just about getting the messaging out there that this isn't a gateway drug, that this is something that's going to help you. It's a natural alternative to those things that you're taking right now. So I think that it's definitely worth a try for anybody that's trying to figure out, where to go, how to help alleviate their pain. And I'll start by telling people just to research what is the endocannabinoid system and how does it affect me. So understanding what your endocannabinoid system is would really shed a lot of light for people, as it did for me and those that are around me.
And that stigma is really key to your mission there at Primitive. A lot of people think of stoners, sitting on the couch and eating Doritos, but that is not what you're after there at Primitive. How do you think you can change that stigma and aim really at current and/or former athletes?
I think that we just stick to our guns and what we came in here for. We set ourselves on a mission, and we're just following that mission. It's, like I say, it's to innovate, to create new products that have new applications that people haven't seen. I mean, not that people haven't seen before, but are more bioavailable to your body, more efficacious. So people are actually getting what they're expecting from their medicine. To innovate, to educate, and to do research on this plant. So those same products that we want to bring to market, that we want to be innovative in, we want to be able to do research on those things and really see how they're affecting the human body, such as our research partners are already doing, Harvard, UPenn, Johns Hopkins, and such.
And one of those ways is through beverages. Tell me about the beverage space that you guys are looking into.
Yeah, so we have coming up this summer new product line. It's called Primitive Performance, and the special thing about Primitive Performance is that it'll be infused with nano. And one thing about nano is just like I was just telling you just now, it's more efficient. It's more like it's like personalized medicine because you know exactly what you're getting, from microdose to whatever dose it is that you need. And just having that it's more bioavailable. That just allows it to be more productive for us in using it. And not anything at the same time, you don't need as many cannabinoids when you're using nano technology because of the small size of it. It's more bioavailable, and it's able to go directly into your bloodstream, in turn getting right to creating the solution right away.
So it's essentially a recovery sports drink. Can't wait to see that. Want to get your quick take on some football news. You played your entire career in Detroit, retiring early rather than returning to Detroit. Conversely, the game has entirely changed today. In the last month or so, we saw the two best receivers in the game, Tyreek Hill and Devontae Adams, both traded in their prime. What's your reaction to this, and how much has the business of the NFL changed?
I think the business of the NFL hasn't changed so much. One thing that has changed is the business-minded players. I think guys are more focused on, one, treating their body as their business, and two, looking forward to what business they're going to go into after football. I think that if anything, that's the thing that's changed the most that I've noticed in the NFL. But
were you shocked that those two were traded?
No, it doesn't surprise me. If Tom Brady could get traded, anybody could get it.
All right. Calvin Johnson, NFL Hall of Famer, the founder of Primitive Group. Great to see you again, Megatron.
Joining us now with more on Tesla's latest earnings, Jefferies Managing Director Philippe Houchois. Philippe, thank you for being here. I know what got your attention and what got a lot of folks' attention was that automotive gross margin, which was above 30%. And as you said in a note to investors, cost of goods sold per unit was actually down. So it wasn't just about Tesla raising prices that contributed to that margin. How did Tesla achieve getting those costs down? And can it continue to keep them down?
Mm-hmm. Well, that's going to be bigger questions. I think the reason they get costs down is because, well, first of all, I mean, they're growing very, very fast, so they leverage their cost base much better, whether it's depreciation or the volume of cars which they amortize the R&D. But also, I think what Tesla is doing is a very different approach to the auto industry business model. The industry is based on complexity of cars, complexity of models, and what Tesla is trying to do is basically sell as many cars of a very small number of models, and then you get basically leverage through the fact that you have relatively few components. Your cars are relatively simpler to assemble compared to your competitors, and that continues to improve to give you productivity gains. And that's we'll see how long that can continue, but it's a big part of the reason why the cost of goods sold per car is basically going down. So it's interesting because I think people expected there'll be a move up in revenue, and actually the move up in revenue wasn't that visible in Q1 versus Q4. What is going to be interesting to see is that normally, based on what the CFO said, the backlog of cars, the order book they have, is on a higher pricing.
Philippe, let me look a little longer term because Elon Musk mentioned on the call last night, by 2024, they could be making at some form of volume autos with no steering wheel and no pedals. How big a business do you think that will be for Tesla over the next decade?
Yeah, it's the dream of the robo-taxi, and a lot of people have been working on that. I'm still a bit skeptical. I'll believe it when I see it. I think the economics of the robo-taxis are not that clear. We know Cruise and GM have been working on that for a while. But it's interesting because it's a departure from what Tesla had been saying in the past. The idea was that Tesla would stop selling cars. They would only lease cars. Those cars would come back into the Tesla network. And so this idea of creating a specific model for robotaxis is intriguing. They can produce it as a car fairly quickly or simply, I think. Of course, FSD has to work. So we'll see how that develops in the course of 2022. But the claims that it will be cheaper to ride in robotaxis than buying a subway ticket or a bus ticket, that part we need to validate.
I want to ask about lithium, right? Because that may be one of the limiting factors to how many Teslas can be made. Are you optimistic that they'll overcome that? I mean, there's only so much that you can get out of the ground, and there are only so many producers out there. Is that something they can figure out?
Yeah, no, I think Elon Musk was very clear warning about the issues of material availability. He's also very vocal saying there's lithium everywhere in the world. So it's not the issue of, it's basically the timing, getting the right amount of lithium, getting it extracted on an economical basis, and matching the demand of the industry to use lithium in batteries with the ability of extracting the lithium, processing it in sufficient quantity. So I think it's more of a mismatch in the timing of that availability rather than a shortage of the material itself. There are other materials we can worry about a bit more, like nickel. But I think what's interesting for me is how long Elon Musk has been warning about these issues. And they've acted accordingly. They seem to have secured raw materials in quantity, in some cases at a lower price than what the market is today. What was clear also from his comments yesterday was that he sees those pressure on materials as a potential headwind for EV adoption. And of course, the part of the issue is to figure out who else in the industry has secured sufficient materials or who is at risk of basically falling behind a little bit in market share as the whole industry transitions to EVs.
Philippe, obviously Tesla seems to be having no problem with demand for its cars, even at the price points where they are. But do you think Tesla should be coming out with a lower priced car, and do you think they will?
Well, it's important. I think a big driving force of Tesla has been affordability. And Elon Musk wants to speed up the adoption of a cleaner energy world and cleaner transportation. What is odd today, in 2022 at least, is that he's basically this structural target of affordability has been kind of set aside, and there's an impression that Tesla right now is maximizing profit. And it makes sense because it's not just Tesla, but the whole industry is in a shortage situation. You cannot produce enough cars. Tesla is a bit better than the other producing. But effectively, they seem to be maximizing profitability today. That is not a strategy. I think it's a tactical move on the part of Tesla, given the context of the industry today. What will be interesting to see is how they go back on track to making those cars more affordable and continue to drive market share. And right now they're playing a little bit, I shouldn't say playing, but they're acting a little bit on the insurance. That's when we're improving affordability. There's been a lot of talk about should they do their own financing of cars, where they would be able to adapt the residual values to each customers and improve affordability. And of course, at some point, there's the need to launch and sell more affordable vehicles. Part of the discussion on those vehicles is also there's been an obsession with range. And at this stage in the technology of batteries, range comes with bigger, heavier, more expensive batteries. And if the industry is able to, of course, continue to improve density of batteries, have the same energy on lesser material content, or if consumers are comfortable having cars with less range, and if they're comfortable to have the ability to charge those cars easily, then we'll be able to bring down the price point of EVs. But right now, we're still in a situation where EVs are only affordable for a relatively limited segment of the population. And but that's not going to drive the transition to a cleaner transport. We need to move that paradigm to a more affordable car.
Something tells me people are not going to be willing to give up much of that range. Philippe Bourgeois, thank you for being here.
13 dispensaries will open across the Garden State, the 18th state to legalize recreational weed. Let's talk about that with the CEO and president of the U.S. Cannabis Council, Stephen Hawkins. Stephen, good to see you, sir. Before we get into New Jersey, give our viewers a sense of what exactly the U.S. Cannabis Council is and what are your goals?
Well, Dave, great to be on the show. The U.S. Cannabis Council represents many of the largest MSOs, multi-state operators in the cannabis industry today, as well as some of the leading advocacy organizations. The organization was formed to really have a comprehensive and unified voice in Congress as we see the inevitable day that cannabis is descheduled and legalized, and we see the end of federal prohibition. So we seek to reform the cannabis laws at the federal level and to have a presence in the states.
All right, we'll dive into the likelihood of legislation in a moment, but let's talk New Jersey. A lot greener today in the Garden State. There were fears that lines would be out of control. I did see across Twitter long lines before dawn. How'd the opening go?
The opening was fantastic. It just shows the breadth of public support for cannabis. The number of Americans. We know that public opinion polls for legalization at 68% nationally. The latest polls in New Jersey show that 56% of all New Jerseyans would be fine seeing their municipalities with cannabis businesses. So this is really the start. These first 13 medical dispensaries that have opened their doors to today. We fully expect that New Jersey will be incredibly robust, and there's an estimate that we'll see $2 billion worth of cannabis revenue out of New Jersey in the future. $2
billion. And next is New Jersey, New York, and of course Connecticut. What state are you eyeing next?
Gee, I think we will see Maryland, Dave, in November at the ballot. I fully expect that the constituents in the state of Maryland will pass a ballot that will bring cannabis into Maryland. Rhode Island is very close, and I think we're going to see more activity in some of the red states. The voters in South Dakota last election cycle voted for cannabis legalization. There was a glitch, I guess, in the referendum, and the state Supreme Court struck it down, but it will be back. So again, what we see is that cannabis tends to be more popular than any politician on the ballot. And I expect that we'll see red and blue states across the country pass referendums and legislatively moving cannabis towards adult recreational use.
Stephen, there's no Republican nor Democrat anywhere near 60% right now in favorability, not even close. We talked with Curaleaf Chairman Boris Jordan yesterday. Here's what he told us about the lack of legislative progress.
The Democrats, to be honest, have been a huge disappointment to the industry. We all came in after the election of President Biden thinking that we were going to get real activity in the area of legislation, and we've gotten absolutely nothing. And I think that's the real problem.
Democrats in control of the House, the Senate, and the White House. How disappointed are you?
Well, I'm terribly frustrated, and I share Boris's sentiment. We had a president who campaigned that he would do something around cannabis decriminalization. The White House has done absolutely nothing. So the blue wave that, had its impact initially in terms of investor sentiment that something would happen around cannabis has steadily declined. But I am optimistic that we will see some reform out of this Congress. Safe banking that would allow for banking provisions and facilities to be utilized by consumers, by entrepreneurs. I think that still has a very good chance of passing in this Congress. The Safe Banking Act enjoys the support of 9 Republican senators. It's truly a bipartisan bill. Just needs to get to the floor of the Senate. It's passed already 6 times in the House.
Yeah, businesses desperately need that. They desperately need to be able to write off their business expenses, paying somewhere between 70 and 85% effective tax rate. It's been a disaster. Bottom line, when do you see legislation that would legalize marijuana? How long are we out? Are we talking 2, 3, 4? Or are we talking 10 years in your best guess?
We're not talking 10 years. We may be talking another session of Congress. First, we got to lawmakers used to voting for cannabis reform. Why? Because as they vote, there's sort of a muscle memory, Dave, right? Mm-hmm. They have to get past this first barrier of voting for cannabis and recognizing that this is a legitimate business. 425,000 Americans employed, an industry that's going to do upwards of $25 billion in revenue this year. So it starts, I think, with safe banking. I think then we'll be looking at tax relief, and then thereafter, I think we'll be teed up for a legalization. Rarely does anything big ever happen in Congress in one fell swoop. I wouldn't expect cannabis to be any different, but I think all of the markers are there for us to see the end of federal prohibition. It's not a matter of if, but when.
And Stephen, New York is coming, and social equity is obviously a huge part of everyone's legislation. But in New York, an interesting process there. People convicted of a cannabis offense, they actually get the state's first permits. Business owners are telling me they're fine with a level playing field. Why should you cut the line, though, if you knowingly broke the law?
Well, this is but here's the thing with the equities around cannabis, and this is why we've had so much discussion around what to do with communities that were impacted. We are seeing the legalization of a plant, right, that millions of individuals at one point were convicted for selling or possessing or using. And the question is, how do you rectify that? New York is certainly doing something quite bold by offering those individuals sort of front of the line opportunities. But other states have, put into their tax provisions, opportunities for, some remediation to those communities that were impacted. This is part of the history, the sad legacy of cannabis. But at the end of the day, I'm excited that we are having this, business industry grow. It's going to employ over 1 million Americans. It will bring in revenue into states that desperately need it. And that's all for the better. And it's a great day in New Jersey, and I look forward to New York and Connecticut coming online soon.
All right, we'll see you in New York soon. Stephen Hawkins, the U.S. Cannabis Council President and CEO. Thank you.
Where do mask mandates go from here after a Florida federal judge reversed the CDC's mask mandates for airlines, airports, and mass transit? Let's break it down with Dr. Zeke Emanuel, UPenn's Vice Provost of Global Initiatives and former White House Health Policy Advisor, and our very own health reporter, Anjali Kemlani. So first of all, what do people need to know about this Florida ruling and the changes for now?
Well, the main changes are that CDC can't impose a mask mandate on air travel, train travel, bus travel, interstate travel. They should also know it's a terrible ruling. It's about incoherent as possible. If I were grading as a professor, it would certainly, maybe a B-, maybe a C+. It's very bad ruling. But it does mean that if you want to protect yourself, you're going to have to wear a mask. And that, frankly, gives you less protection than if everyone around you is wearing a mask and you're wearing a high quality mask. So we're all going to be less protected.
Zeke, where do we go from here? I know the CDC wants to overturn it, and there's obviously confusion as a result because companies have to put in place some of these policies. So what do you see unfolding moving forward?
Well, I think the CDC and the Department of Justice wants to appeal it because they want to establish the CDC's ability to actually make rulings in this area for public health in interstate commerce. And I think that's pretty clearly their prerogative given the law. But I think as far as wearing masks on these on planes and trains and such, I don't think we're going back unless the pandemic gets substantially worse. When you have the big airlines peeling it back and things, it's hard to reverse it and go in the other direction. So I think, unfortunately, this was a one-way door, not driven by public health, driven by political considerations, and frankly, not very smart reasoning.
I'm glad you brought that up because it seems like political consideration is exactly what has been deemed the underlying factor here, and also to set up for the summer when we know, of course, it's going to be a very political season, and for the administration to be able to basically ease their way out of the pandemic in at least words and actions. What do you think about that strategy?
Well, I mean, look, it's very hard to predict the future, especially with COVID. It's surprised a lot of people and experts. There's no one who's gotten it right. I don't even know that there are many people who've gotten over 70% of their predictions accurate. I think over the summer, we're likely to go up now and maybe fall in early June. How bad this is, I don't know. But, everyone was saying, oh, look, we've got cases going up, but hospitalizations aren't going up. On the other hand, if you look at it, the fact is that in 20 states, hospitalizations are going up. And maybe this isn't so benign a condition as people thought. But I think that sometime in early to mid-June, we're probably going to be on the downward side of the curve. What I'm really worried about is the fall. We're going to bring people back together. People are going to have traveled extensively over the summer. And I think that, we are seeing a lot of evolution of this virus. And so you're going to see a lot more variants and maybe, unfortunately, some that are a bad combination of highly transmissible and virulent. We just don't know. I have told my university, you have to prepare for a surge in the fall, and we have to be aware of that. And I think that is, if I were thinking as a head of a company or head of institutions or head of organizations, I think you have to be prepared for that.
So then to that point then, you mentioned organizations, depending on how much pushback you get, depending on where you are and what the company policy is, how are companies supposed to navigate this period so that they try and stay compliant when you have employees saying, look, the mandate has been lifted, I shouldn't have to do this?
Well, I think, that depends upon the company's sticking to, I think, what the experts are saying. That's what a judge with no medical training and no public health training has said. And I think you have to say, listen, when we're indoors and we're collecting for meetings, we want you to continue to wear masks. That's what I do at my office. That's what I do with the students I teach. Every student has to have an N95 mask on when we're in class, and we have air filtration systems going. We want to protect everyone. And I can tell you that this current surge, we have a lot of students out because of contracting COVID or being exposed to another student who's had COVID.
Something you have to remember, even though we've all got COVID fatigue, obviously COVID's still front and center there. A big thank you to Dr. Zeke Emanuel there and Yahoo Finance's own Anjali Kemlani.
So joining us now to discuss the state of streaming is Jessica Reif-Ehrlich, who is the Senior Media Entertainment Analyst over at Bank of America. Jessica, great to have you here with us today to break this down. So how does the cancellation, absolutely, how does the cancellation of CNN Plus alter the valuation and even perhaps the rating for WBD, Warner Brothers Discovery?
Well, it actually does not. We really love the WBD, Warner Brothers Discovery story, and have thought that CNN Plus would be DOA as soon as Discovery took over. The mystery is why AT&T rushed the launch, why they spent so much money. They spent probably 3 times more than Fox Nation spent in the whole time it's been on, with significantly fewer subscribers. So in our view, Discovery, Warner, or the new WBD management made the right decision, and we're just puzzled regarding what AT&T was thinking to begin with.
Jessica, what's next for Warner Brothers? Is it one massive bundle that includes all those properties and perhaps at some point folds back in CNN?
They just closed the combination 2 weeks ago. And so when Discovery reports Tuesday, they will not have operated Warner Brothers at all. But we think this combination will be really a fantastic combination. We see it as a growth and deleveraging story. They haven't yet given their go-to-market strategy for streaming, but our expectation is that they will have a very robust entertainment offering HBO, some of the Warner product, the Warner films, and news and sports. So unlike most of the services that are available, this will have, again, a broad array of content, of entertainment, but news and sports, and they will also offer subscription as well as AVOD, or lower subscription price with advertising support. Discovery already offers that, and their ARPU, the revenue they generate per month, is higher on their advertising product, or what they call Ad Light, than it is on their subscription only. So they're in a great starting position.
Okay, so a good starting position. How much of the resources, whether human or capital, do you expect them to begin reallocating, and how soon to really hit in stride on some of those timelines that we've seen them already rush to get out the door, but even now as they're repositioning to eventually be able to offer another compelling streaming platform in the future for some of the different viewers to take advantage of?
Well, the heavy lifting for Warner Brothers Discovery is just starting. They just took over. And we do expect them to streamline operations. But from a DTC perspective, they have to have an offering for the U.S., and they've really barely gone to the rest of the world. So there's still a very long, there's a huge opportunity for them globally. And they have to, they haven't done anything yet as a combined service. So it's they've got in our view, a long runway for growth, and they have a lot of content that potentially will go in it. If you just look at what HBO Max has done so far, the engagement seems to be really, really high, and their sub growth, they beat their guidance last year. Like they raised guidance 2 times and beat both times. So. They seem to be on a very good path. Of course, everything's tempered or colored by Netflix, but we see this as a very, very different offering.
HBO and HBO Max adding 3 million subs, but Netflix really the streaming story of the week, their first sub loss in more than a decade. And you have Bill Ackman dumping his stock. That's $400 million in loss. Does that tell you things are going to get worse before they get better in Netflix? And is ad-supported content the solution there?
Netflix is a different animal than many of the other companies, many of the other streaming services. What the studios have in general versus somebody like Netflix or Apple, they all have deep libraries. So they have content that consumers know and are very familiar with. They also have multiple platforms to promote that content and for viewers to see that content. Consumers are very familiar with Disney, with Marvel's universe and Star Wars universe. So these are extensions of what they have, and it's not new. On the advertising side, they have very deep experience, and they're already advertising on many platforms. So it's an extension of what they already do. The demand is really high for limited advertising, 3 to 5 minutes of advertising in a targeted environment. So it's from that perspective, Netflix is the incumbent and has a lot to lose. And whether it's HBO Max or Disney Plus, these are the newer players who have a lot to gain.
For Netflix that has been able to benefit from the growth phase of cord cutting and the hard, swift move to streaming that we've seen, where would you say that we are in the streaming landscape right now in terms of that growth phase clearly being a thing of the past, and now for some of the shuffling where people are deciding to pick and choose either their price point and based on that price point, which platform they're going to matriculate towards? What would you describe of the state that the industry is in right now in either that growth or that churn phase?
I mean, clearly streaming is maturing. Netflix has been around for quite a while. Apple and Amazon have come in as well. So there's just a wealth of content. I mean, there's so much content. It's actually confusing, I think, for consumers and very easy, unlike pay TV, super easy to turn on and off. So it's imperative to have very strong content. So just look at Disney Plus. They've been saying for 2 years, it will take until second half of fiscal 22, which is actually the June quarter right now, for them to reach their content cadence stride, for them to get to 100 originals a year, meaning they basically have 2 new either TV shows or movies every week. And that's what keeps viewers, tuned into a service, or, that's what cuts churn. So it's very easy for them. Unlike let's say Netflix again or Apple. I'm not trying to pick on Netflix. Every show is a new show and has to be marketed. So it's just they're very, very different in that regard. But I agree, streaming is much more mature. It may be harder to keep consumers. Netflix is the highest priced or one of the higher priced services, and so as such, there's still, in our view, a pretty big growth curve for the others.
Okay,
especially on the ad-supported side.
Indeed. Bank of America analyst Jessica Reif Ehrlich, appreciate your analysis today. Thank you.